Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
When is a reverse mortgage not the best option for you? We're going to talk about that today on Reverse Mortgage Radio, so thank you for joining me. However, as you know what I like to do, give the little hook there at the beginning and then go to something else. Today, what I want to talk about before we get to whether or not a reverse mortgage is good for you are interest rates. What we're going to do is take a look back. Let's go back in the time machine to the end of 2022, November, December, even October. And I'm thinking about all the people I talked to back then. In 2022, all the interest rate pundits, kind of like sports pundits or political pundits, they were sure that the interest rates were going to come down, probably spring or summer of 2023. Does that sound familiar to you? And I screwed up, in all honesty, because we know what happened now. Hindsight's 2020. We could look back and say interest rates did not come down. They went up. And I look back on the people I spoke to at the end of 2022, early 23. I had a list, probably 25, 35 people long, that I was supposed to call back when interest rates started coming down. And I never did call them because interest rates never came down, right? And if I was smart, what I would have done is when people called, here's a scenario. Basically, somebody calls and they say, I want to do a reverse mortgage. I want to pay off my existing mortgage and get an existing line of credit. I want to leave the rest of the money that's available in a reverse mortgage in a line of credit. And so what would happen is I would run the numbers for them. We could give them enough money to pay off their mortgage, but maybe instead of giving them $50,000 left in the line of credit, they had $15,000 or $20,000. I'm thinking about one couple in particular, specifically. We could pay off their existing mortgage for them, save them almost $900 a month, and have about an $18,000, if I remember correctly, about an $18,000 line of credit. Well, they decided not to do it. We'll just wait till interest rates come down. They never came down. And then later in the year, I looked back on that file or on that situation, and I couldn't even pay off their existing mortgage at that time because now the interest rates had gone up so much. The loan amount that I could offer was lower than the payoff on their existing mortgage. You see, the way reverse mortgages work is that as the interest rate goes up, the higher the rate, the less money we can loan. In fact, I probably should back up a little bit and let's talk about how reverse mortgages work and what it is, the bottom line, because there's always new listeners on the show. And if you've heard this before, you can just mute me out for a few minutes and then come back. Or if you're listening on the podcast, just skip over it. But a reverse mortgage is 99 in Colorado, I'd say about 97% of the time, an FHA insured loan that's specifically designed for people who are 62 and over. If one of you is 62 and one of you is under 62, as far as a married couple, you can still do the reverse mortgage. Well, even if you're not married, you can still do it, as long as one of you is over 62. But then what it does is it allows you to convert a portion of the value of your home into money that you can then spend, because you can't spend equity unless you convert it into cash. You can't spend your equity at the pharmacy or the grocery store or the gas station. You need to convert it to cash. But what happens is when you do that with a conventional mortgage or a home equity line of credit you get from your bank, what comes with that when you get that extra cash? A monthly payment. Reverse mortgages do not require a monthly payment. In fact, I was really surprised. I just earlier this week, a couple days ago, I met with a lady who her husband passed away shortly after they got the reverse mortgage in 2019. She was under the impression, because she was being charged interest and mortgage insurance every month, that she had to pay that every month. And the loan officer apparently was not clear with her, because she said, I have to pay this. He said, I have to pay it. I said, no, you're charged interest and mortgage insurance every month, but you do not have to pay it. Now, obviously, there's been some benefits for her not having to pay it, because her line of credit increased a lot and her loan balance did not. She was paying the interest and mortgage insurance every month, so her loan balance stayed pretty close to the same. But the problem is that this was starting to become a burden as interest rates go up. The payment went up on her, where normally most people, 99% of people with a reverse mortgage, do not make mortgage payments on it. You don't have to. You're charged the interest, but you do not have to pay it out of your pocket. That's the biggest benefit with reverse mortgages. And when I cleared that up for her, she wasn't my client at all. I happened to be, luckily I was near another customer who I was taking an application for. And on the way back after that, I met with her and we clarified some things. She lives in a lovely home and we had a great time chatting for a while and talking about old times. But either way, it was just the misunderstandings go even when you have an existing reverse mortgage. Sometimes there's still misunderstandings unless you're dealing with a loan officer who's knowledgeable about this and understands how to explain things. I've been specializing in reverse mortgages for 21 years now. It's the only loan I do. I don't do any other loans. I don't do VA. I don't do 403Bs. I don't do conventional mortgages or HELOCs or any of that stuff. I only do reverse mortgages. And if you want to ask me any questions about reverse mortgages, please feel free to call me directly. My name is Bruce Simmons. You're listening to Reverse Mortgage Radio, and you can reach me at 303-467-7821. 303-467-7821 is my direct line. And I am the reverse mortgage manager for American Liberty Mortgage. We're also a 21-year-old company. We just celebrated this week our 21st anniversary in the business, which is pretty good for a lot of small mortgage companies. We're a mortgage banker, actually, here in Denver. That's where our headquarters is. You could check us out online. We have AAA-rated Better Business Bureau, or whatever their rating is. My website, if you have any questions about reverse mortgages, is reversemortgageradio.net. You can also listen to podcasts dating back to 2017. I've been doing this podcast and / radio show since then. But then what happens with a reverse mortgage, you're charged interest every month, but you don't pay it. So your loan balance gets larger and larger and larger over time. And I always make sure to tell everybody that if looking at that statement is going to cause you more stress than the benefits you get from the reverse mortgage, do not do a reverse mortgage on your home. If you're concerned about that equity not growing the way you like it to, because in all odds, equity is still going to grow in your home, even with a reverse mortgage, because you figure roughly a 4% appreciation on, say, a $500,000 value home. That's $20,000 a year. Whereas maybe you're being charged 7 or 7.5% interest on a $200,000 loan balance. So that's what, I don't know, 14,000 tops if you had a balance that much. So you still gain $6,000 equity. So you're gaining equity, at least at the beginning of the loan. But let's get back to the topic at hand. Basically, back to the people that did not get a reverse mortgage in 2022. And then they couldn't get one in 2023 because now they owed too much money. What I should have done, I screwed up, is really on me. Even though they made the decision not to do the reverse mortgage at that time, I'm not a pushy salesman. And I should have been more forceful. What I should have done, now hindsight 2020, and I'm telling people this now, is if we can loan you enough money to pay off your existing mortgage and save you $900 a month, granted, your line of credit isn't as much as what you would have liked, but what you're doing is you're kind of hedging your bet against an upside on the interest rates. let's say that the interest rates do go up. Well, you can't do the reverse mortgage. You can't refinance your reverse mortgage a year later if interest rates come down to increase your line of credit. But you're going along all this time without making that mortgage payment. You're saving yourself $900 a month. And over the course of a year, what's that about? That's $10,000, $11,000 over the course of the year that you've saved. You've kept that $900 a month in your pocket, even though you didn't have the line of credit. Now, if in the good side, interest rates drop enough to where we can benefit you, you do have to keep the loan for 1 year before you're allowed to refinance. But odds are, if interest rates do come down, and I don't know if they will or not, in all honesty, we're getting mixed signals from the Federal Reserve. Some Federal Reserve guys say, well, we voted to have to lower the interest rate in the future. And others say, well, we really need to keep an eye on inflation. And who knows? Our economy is giving all kinds of mixed signals. There's people predicting another Great Depression. And there's people saying property values are going to drop, which I don't think that's going to happen. But then other people are saying that it's just going to continue going on like normal. And who knows? You don't know. I don't know. But you can hedge your bet by doing a reverse mortgage. Get out from under your mortgage payment now. Yeah, okay, so you're not going to have a $50,000 or $100,000 left over in a line of credit. But you're going to be saving whatever the principal and interest portion of your mortgage payment is, because it's still your responsibility to pay your property taxes and insurance and maintain the home. You have to do all that. That brings me to the topic that I really wanted to talk about today, though. When is a reverse mortgage not a good option for you? Let's talk about that, because really I'm going to touch on 5 potential scenarios where a reverse mortgage might not work for you. Number 1, if the home is not going to be your primary residence for long. Let's say you're thinking you're on 3/4 of an acre and you've got 3 bedrooms, 2 bath, and a full basement, and you've got all this land and you've got stairs to deal with, and you're 73 years old. You love the house, but you know you're not going to be able to maintain it much longer. It might be best for you to sell your existing home, get out from under whatever mortgage that might be existing on that home, take the equity in the home, use it as a down payment on a new home, and use the reverse mortgage for purchase program. Call me if you have any questions. If you're in that situation where you want to move, but you're thinking, well, okay, we got $350,000 or $400,000 equity in our house. We can't buy anything else, so we're stuck here. We love the house, but we know it's not the best for us. Call me. I can run some numbers for you and let you know how much of a new home you could get. So you have $400,000. You say, I can't buy squat for that. Maybe you could buy something for $600,000 or $650,000. Or maybe you could buy something for $500,000 and keep extra cash in your pocket from the sale of your home. And I'll have to touch, usually I like to do the reverse for purchase program as we get closer to spring when people are thinking about selling more. Maybe we'll touch it on that next month in March. And then we can go into details about exactly how it works. But that's a great way to get out of the home that may not be best for you. Now, on the other token, maybe you're in a home and you're still working and you're thinking you're going to pay it down more. This is my situation, actually. I'm not quite 62 yet. I'm only 58. But I plan to use a reverse mortgage for purchase myself. But I'm in a home that I know I'm going to move out of eventually. Probably when I'm 65, 68, when I retire, I'm going to move out of this house because I'm in a multi-level home on a 10,000 square foot lot. Actually, what I want to do is get a good ranch home on a couple of acres because I love to garden and have a little yard like lawn and flowers and stuff. But then in the back behind it, have all my garden stuff where there's not trees shading my everything like I have in my house now. I've got way too many trees. I've been here 25 years and everything has grown up and I've got way too much shade for a decent garden now. But that's what I want to do. And that way, as I age, I know that I'm not going to be able to garden when I'm 80 probably or 85. But as I age, I could just let that become a field, the outside part, and just take care of my little yard that maybe is a small little yard that I can cut easily on the weekends and things of that nature. Anyway, I'm sorry. How did I get on that topic? But if you're in a home that you know you're not going to be staying in, and it's not your forever home, you probably don't want to do a reverse mortgage. You might. It just depends on your situation. Maybe you really need to retire, or you're forced to retire. Maybe you lost your job, you were downsized, and you still have a mortgage on that house, but you want to stay in that house. Maybe we could do a reverse mortgage, and I've done this before for people. Do a reverse mortgage on your current home, and the value appreciated over the next 5 years, and this couple, they were able to sell that home, and they had enough equity to put for a down payment on a new home and do a reverse mortgage for purchase on the new home. So they had a reverse mortgage on their old home. They sold it, paid off the reverse mortgage, and got a new reverse mortgage on the new home. It's a great deal, but that's possible. Your situation, everybody's situation is individual. So call me. We could talk about it. I'd love to explain it to you. But like I told you, I'm not a pushy salesman. I will tell you, if you're in that situation that we talked about before, I may suggest to you, it might be a good idea to pay off the existing mortgage at least, and we'll wait and see what happens. But get out from under that mortgage payment. And one other thing is, maybe there's not really a benefit for you, okay? If we can't loan you enough money, but you say, well, I can come up with $10,000. So let's say, for example, you have a $500,000 home and you owe $230,000 on it, but we can only loan you $220,000. And you say, well, I could come up with an extra $10,000. Well, you might want to, you might not want to, because we have to pay off any existing loan that's on the home. That's something I should clarify. Whatever loan is on your home, we pay it off just like any other refinance would. So you owe $230,000 on your home. We have to loan you enough to pay off that $230,000. If I cannot loan you enough to pay it off, we could still do the reverse mortgage, say for $220,000, but you have to bring the difference to the closing. So you would have to pay out of your pocket an extra $10,000 to cover the difference. So that then what happens is the title company who handles all the money at the closing, they take the $220,000 from American Liberty Mortgage that we give you for a loan against your home, and then they take your $10,000 that you bring to closing, so they have $230,000. Then they send it to your existing mortgage company to pay them off, and you're out from under that mortgage payment. You have to continue to pay your own taxes and insurance, but maybe there's not a benefit for you to do that. You have to evaluate what's right and what's not for you, depending upon your specific situation. So there has to be enough of a benefit. Or let's say, for example, that you've got $40,000 in credit card bills, and I can only loan you enough to pay off your existing mortgage on the home. And then you've still got all these credit card bills. Well, yeah, if you save yourself $800, $900, $1,000 a month, you could pay those credit card bills off quicker. But maybe you don't want to do that. Who knows? It's just, there's all different kinds of situations. There just has to be enough of a benefit for you. Like I said, if looking at that statement every month is going to cause you more stress than the benefits you get from the loan, you should not do a reverse mortgage. The other thing is, well, this goes on along that same line exactly. If you are so attached to the equity in your home and you're like, I have to have this home free and clear, then looking at that statement and seeing your loan balance get bigger and bigger and bigger is going to cause you more stress on your financial or your mindset. You should not do the reverse mortgage. The reverse mortgage is intended to relieve financial stress, not create it. I do not want you calling me 2 years, 3 years down the road and telling me that you regret doing this loan, or telling me that I ripped you off or something like that. Because knock on wood, in 21 years, I've never had a customer or even a family member of a customer call me and tell me that they've regretted doing the loan. And I do not want you to be the first. You got it? So you have to be okay with the fact that the loan balance will grow over time. The loan balance grows because you're not paying a mortgage payment. You're not paying any principal or interest. So that interest that you're charged along with mortgage insurance, because this is an FHA loan and all FHA loans have mortgage insurance, that amount of money gets added to your loan balance every month. It's called negative amortization. The loan balance gets larger and larger and larger, and it compounds too. I'm not trying to talk you out of it. I'm just telling you the details of it. You've got to know the facts, the pros and the cons. And if you've got a salesman saying, oh, this is the best thing ever, hang up. It's not. It depends on your situation. I've talked to people who said this is the best thing ever for their situation, but it may not be for your situation. By the way, too, if you just tuned in, you are listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm the Reverse Mortgage Manager with American Liberty Mortgage. You can reach me directly at 303-467-7821. You can also visit me online at reversemortgageradio.net. And next week, this podcast will be up on my website. Click in the upper right-hand corner where it says Reverse Mortgage Radio, and you can listen to the entire episode. But it's at reversemortgageradio.net or 303-467-7821. All right, let's get back to it. We talked about when a reverse mortgage is not a good option to do for yourself. That's if you're moving soon, if there's not enough of a benefit for you, or if it causes you more stress than if it causes stress instead of relieving stress, you should not do a reverse mortgage. All right, let's touch on number 4. If you cannot afford to live in the home, back in 2014, FHA created something called financial assessment. And what that is we have to evaluate that you have enough money to still live in the home. We have to make this a quote unquote sustainable solution for you. Don't you love that word? It's trendy now, but it's been a while for a reverse mortgage. We want this to be a lifetime sustainable solution for you. You have to be able to afford to live in the home. What happened, part of the bad name reverse mortgages got is back before 2014, there was no income or credit qualifying. And what people would do is they would get the reverse mortgage and they might even take it all in one lump sum. Now we don't even let you take all the money in one lump sum. You can take part of it in a lump sum, but you can't have all the money available to you. There's restrictions. And what people would do is they might have had terrible credit. They were living high on the hog for a couple of years. And the loan officer, because a lot of loan officers back then came from subprime industry in 2006, 2007, 2008, they jumped ship from the subprime industry and moved over to reverse mortgages. And they were not very upfront with the requirements of the reverse mortgage. The counseling wasn't as thorough as it is now because you have to talk to a reverse mortgage housing counselor before you're allowed to sign any papers. Anyways, those people would blow all their money in the first couple years, not pay their taxes or insurance, and then they didn't have the money to pay their taxes and insurance, and the recession came, they lost their job, and it caused all kinds of problems. Then, because if you do not pay your property taxes or your homeowner's insurance, you could be foreclosed on. Yeah, I said the F word on the radio, foreclosure. There are some loan officers that will not say that, but that's what will happen if you don't pay your property taxes when you have a reverse mortgage. In fact, that's what will happen if you don't pay your property taxes, period. No matter if you have a mortgage, you don't have a mortgage, you have a reverse mortgage, or you own it free and clear. If you pay off your house free and you own it free and clear, you still got to pay the man, right? You got to pay the man. And if you don't pay your taxes, the tax man I'm talking about, they will take your home. Okay? So no matter what, you got to pay your taxes. But what happened is these people got the reverse mortgage. They didn't pay their taxes. The bank ended up foreclosing on them. And why did they get foreclosed on? Because they had a reverse mortgage, obviously, right? Duh. That's what the news media came out with. And that was part of the negative perception. So to fix this, we now require financial assessment. We have to show that you have enough money to live in your home comfortably with a little bit of a cushion and be able to afford all the other bills you have. Now, granted, there's no mortgage payment, but you have to We calculate your taxes, your insurance, your utilities, and any other expenses you have. If you have a car payment or credit card payments, things like that, you have to be able to afford all that. So that's very important that you have enough money to do that. If you don't have enough money to do that, I can't, and in fact, I don't even want to do a loan for you in that respect. Now, there's ways around it that we can finagle the numbers to help you qualify, because if you've got $100,000 left over in a line of credit, we can use that as income for you. Because if you didn't have the income to pay your taxes, you could tap into that line of credit to pay your taxes, obviously. It's pretty simple. So that's the fourth one. We want to make sure it's a sustainable solution. So if you cannot afford to live in the home after you have the reverse mortgage and no mortgage payment, a reverse mortgage is not for you. Lastly, if you really, truly, honestly to goodness want to own your home free and clear, and you want to leave that as a legacy to your heirs, a family member, your grandpa built the home with his own two hands, and now you want to leave that for your kids, don't do a reverse mortgage on it. It's not right for you, because now, granted, when you pass away, the bank does not take the house. A lot of people think that the bank's going to take the house when you die. I just met with a guy who does in-home care. I network with a lot of different people, and in-home care specialist who he helps people, not with medical stuff, but they run errands for you. They clean their house. They cook for you. They help you with bathing and toiletry stuff and all these things as you get older, and it's harder and harder to do for yourself. He honestly thought that when the homeowner had to leave the home, the bank took the house. And he's not alone. I've been battling that misconception since 2003 when I first started in reverse mortgages. I thought the same thing back before I learned about it. In 2002, before I did my research on it, I thought reverse mortgages were such a scam and the bank's going to take your home and all kinds of stuff. It's not true. It is not true. And I show you in writing, okay? Your heirs inherit the home. They have 6 months to either pay off the reverse mortgage or by selling the home or refinancing, and they can have up to 2 90-day extensions. There are some very, very, very strict guidelines that the servicers have, like the heirs have to contact the servicer within 30 days and make sure that their intention is known. Yes, I want to keep the home. We're looking for a loan. Or no, we're not going to keep the home. We've got to deal with a real estate agent already. Okay? So at 30 days after you pass away, your heirs need to contact the servicing company to let them know what the status is. But if you, and so they can refinance the loan. Let's say your grandfather did build the home, but you need to do a reverse mortgage. The bank doesn't automatically take the home. Your heirs will inherit the home. They could keep the home if they just refinance the loan. So you owe $100,000 on the reverse mortgage, you pass away, they can go get a new loan for $100,000, pay it off, and keep the house. Please feel free to call me with any questions. My name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage here in Denver. You can reach me at 303-467-7821 or visit me online at reversemortgageradio.net. reversemortgageradio.net. Thanks so much for joining me. Hopefully you enjoyed this show, and I look forward to talking to you at some point down the road. Have a great day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA. NMLS number 409914. American Liberty Mortgage is an equal housing lender.